Hi, my name is Prithviraj.
Hi, my name is Sarah.
Hi, this is Prachi.
Hi, I'm Amir.
And we'll be presenting our financial analysis of PUMA and ADIDAS.
With this presentation, we have analyzed the financial performance of PUMA and ADIDAS and have tried to conclude which company has better market standing. For this, we compared and analyzed the key ratios for both the companies. The ratio helped us to suggest appropriate recommendations to investors and creditors in terms of liquidity and profitability of both the companies. For nearly 80 years, both Puma and Adidas are known for their iconic footwear, apparel, and accessories. The world extends across football, running, training, fitness, golf, and whatnot. They have many collaborations with global icons such as Rihanna, Usain Bolt, and David Beckham. Their impact has been undeniably felt in the innovation they have brought to sport, fashion, and culture. Let's take a walk through the course of events that turned these companies into the biggest sportswear manufacturer in the world. Interestingly, the two of the world's most renowned shoe companies were birthed from a bout of bad blood between siblings Rudolf and Adolf Dassler. In the year 1924, the brothers founded the company in Germany. In the year 1948, Rudolf Dassler founded the company Puma, and the existing business assets of the company were divided among the brothers. In the year 2000, the PPR Group, a world leader in apparel and accessories, acquired 60% of the Puma share. In the decade that followed, Puma sponsored 7 football federations and became a European corporation that was traded under the name of Puma SE. As discussed in the previous slide, brothers registered their company as Dassler Brothers Shoe Factory in the year 1920s and made their professional start at the Amsterdam Olympic Games. In the year 1940s, Adolf decided to change the name of the company to Adidas. In the year 1980s, with the rise of cost, Adidas changed from a mostly manufacturing company to a mainly marketing one, and it finally became a corporation. In the year 2000, it was named Advertiser of the Year, and it bought another well-known sports company called Reebok. In the year 2010, it acquired many companies like 510 and TaylorMade, and golf companies like Ashworth and Adams Golf. Now let's take a look at the key external drivers that drive both the company. First is presence. Presence is felt when consumers see their favorite athletes wearing company products during sports events, and in that case, they might consider buying them. Relevance. The company must convince the consumers that its product is relevant and useful in their life. Performance. The company must deliver all its promises to the consumers. Advantage. This character is when the company's product attract the consumer by showing the benefits of the various product it has. Bonding. It is made very important because when customer realizes that company is tailor-made for them in any expectation, it increases their loyalty towards the company. We'll be discussing the SWOT analysis for understanding the strength, weakness, opportunities, and threats for both the companies. The biggest strength of Puma is that its business is spread across 90 countries and it has partnership with famous companies like Ferrari and BMW. Puma's weakness lies in the tough competition posed by the companies like Nike and Adidas. Opportunities that are open to Puma are more sponsorship can be taken up in the international sports event, and it can start entering lifestyle section as well. The threats to them are the changes in the government policies and regulations, and being a global leader, it's affected by the recession and economic slowdown as well. Adidas also has a very strong financial position, has multiple product portfolio to offer. Due to high price, the brand is affordable to limited customers, and that's its weakness. Seeing the demand increase of premium product, Adidas has an opportunity to start expanding their market. Similar to Puma, changes in important import regulations and duty tariffs are a possible threat to the business. Now let's take a look at how the business is segmented across the various products that these companies offer. Puma deals in product categories such as footwear, personal care, eyewear, watches, sports accessories, and clothing. The 43.4% of the business is dedicated to footwear, while 38.3% is dedicated to apparels and 18.3% for accessories. Coming to Adidas business segmentation, Adidas has assorted product line that include accessories, apparel line, and footwear. We can clearly see from the graph that 53% of the business is segmented for footwear, 39% for apparels, and only 9% for the hardware, that is accessories.
Now we will look at some very important risks that public companies like Adidas and Puma face, and we will also look at the strategies they follow to mitigate them. The most important and common risks that Adidas and Puma face are macroeconomic developments, legal risks, liquidity risk, and personnel department. Out of these, macroeconomic developments and liquidity risks are few of the most important risks, and to mitigate them, Adidas reallocates its investments to alternative, more attractive and more stable markets. whereas Puma followed geographic diversification of its products. For liquidity risks, Adidas has cash and cash equivalents together with marketable securities amounting to 1.5 billion euros to meet any immediate liabilities, whereas Puma follows a central financing approach like rolling cash flow planning to manage liquidity risks. International companies like Adidas and Puma are exposed to various legal risks. Puma mitigates these type of risks through continuous monitoring of contractual obligations, whereas Adidas manage these risks by closely monitoring changes in legislation to properly adopt regulatory requirements regarding customs and taxes. For personnel department, Puma has set a control process in place to detect and assess human resource risks. Accordingly, special attention has been paid to managing talent, identifying key positions and high potential individuals, and optimizing talent placement, whereas Adidas continuously invests in improving employer branding activities to be the employer of choice and as a result attract and retain the right talent. Now let's look at the summary of recent earnings call. Puma sales increased by 14.5% to 1,040 million euros, whereas Adidas had a growth of 9% in sales to 5.6 billion euros. The operating expense for Puma increased by 11.7%, mainly driven by higher marketing and retail expenses, and operating expenses increased by 8% for Adidas to 2.1 billion euros. Net earnings for Puma more than doubled from 62 million euros to 136 million, with footwear being the major driver, whereas the net income from continuing operations grew 35% to 549 million euros for Adidas. Now we will look at the compensation policy of Puma and Adidas. In case of Puma, the compensation of the managing directors consists of non-performance based and performance based components. The company's long-term prospects and economic situation are taken into consideration to calculate the total remuneration. Under the new performance-based program, 70% of the compensation will be based on the midterm performance of Puma SE share and 30% will be based on the midterm performance of Kering SA share in relation to benchmark companies. For Adidas, in the case of 100% target achievement, the total compensation is made up of around one-third fixed compensation and around two-thirds performance-related compensation components. Also, the supervisory board may grant a special bonus in case of an extraordinary performance by an executive board member. Such special bonus is limited to a maximum of 100% of the annual fixed salary of the calendar year for which the special bonus is granted. Now let's have a look at the current market position of Puma. The current market standing of Puma as of 6th March 2018 is $448.93. The stocks of Puma are currently in overweight position, which means they have better value for money according to financial analysts, but they were in hold position for the previous 2 months. For Adidas, the current market standing show its share value to be at $107.34 as on March 6, 2018 and has been in the overweight position for the past 3 months. Now looking at the stock market trend, Adidas stock are consistently overweight than Puma. It is clear that Adidas stock are in a better position today, hence the valuation favors Adidas over Puma.
We now come to the financial performance of Adidas and Puma. Financial performance refers to the act of performing financial activities and indicates whether financial objectives are being accomplished. Financial performances are measured based on a given period and similar firms across the same industry are compared. Measuring financial performance is required to maintain the organization's liquidity in the day-to-day operation to ensure meeting its obligation. The analysis makes the platform for comparison with other competitors, indicating that the business is conducted in a rational and normal way. The analysis is primarily based on balance sheet and the income statement. Now let's look at the horizontal analysis of both the companies. The horizontal analysis identifies the changes in the amounts of corresponding financial statement items over a period. It also helps to determine the impact of operational results on a company's financial condition over the review period. The analysis is based on two periods of accounts, and the earliest period is usually used as the base period. The base period amount is calculated as 100%, and each following period is expressed as a percentage of the amount in the base year. As you can see from the slide, the horizontal analysis of the income statement for 2015-16 has been done for Adidas and Puma. We observe that for Puma, for a net sales change of around 8%, there is a net income change of around 67%, whereas for Adidas, a net sales change of around 14% gives a net income of around 59%. The GP for Puma is around 8, whereas for Adidas it is approximately 15, which means Adidas has a good potential financial health. Now we come to the horizontal analysis of the balance sheet for the year 2015-16. For Adidas, we observe a negative non-current liability change, suggesting that it can pay off most of its non-current liabilities. It also shows that Adidas has a significant percentage increase in current asset and stockholder equity, but has incurred a greater percentage increase in its liabilities as compared to Puma. Next, we come to the vertical analysis. It is a comparative analysis of a financial statement where each line item on accounts is listed as a percentage of another item. The advantage of this analysis is that the balance sheet can be easily compared to any size of organization. The benchmarks used in the calculation are total assets or total liabilities when calculating assets and liability line item percentages, and total of all equity accounts when calculating all equity line item percentages. Adidas has incurred a very high percentage of current liability over its total liability compared to Puma, as they are heavily investing in business expansion. Adidas has also invested 22% more on marketing than Puma. Going forward, Adidas has a promising working capital position and its ability to maintain its near-term obligations from the investments made. Puma's current assets form around 64% of its total assets, whereas for Adidas we observe that it has around 59% higher the proportion of current assets. When we look at the vertical analysis of the income statement, we observe that both the companies have near about a similar stand-up. Let's move to the financial ratio analysis. Ratio analysis provides key indicators of organizational performance. It helps us understand the current business position of the organization. One of the main reasons to calculate ratios is that it gives us the summary of complex accounting details into a relatively small number of key indicators. First, we see the liquidity ratios. Liquidity ratios measure a company's ability to pay debt obligations and its margin of safety through the calculation of metrics. Current ratio is the company's ability to pay its short-term liabilities with its short-term assets. We notice that Puma has a ratio of over 1 for both the years, whereas Adidas's ratio for 2016 is less than 1, which means it could face unexpected bumps. Next is the quick ratio. It is the company's ability to meet its short-term financial liabilities. Puma has consistently maintained its quick ratio, whereas Adidas's ratio is lesser as compared to Puma, which means Adidas cannot pay back its current liabilities at this moment.
Now let us look at the profitability ratios. These ratios help us to assess a business ability to generate earnings compared to its expenses and other relevant costs incurred during the specific period of time. First, let us look at return on assets. As you can see in the graph, Adidas has a higher return on assets for both the years. That means it has a more efficient asset management in comparison to Puma. The ratio is higher because there is 60% increase in its net income, whereas there is only 13.4% increase in its asset. Return on equity ratio. Adidas has clearly a better return on equity than Puma. That means it has more money from stakeholders to generate profit and grow the company. As I had told earlier, Adidas has net income has increased by 60%, whereas its stakeholders' equity has just increased by 14.2%. Gross margin. Puma and Adidas have consistently maintained their gross margin for past 2 years, that is Puma at around 45% and Adidas at around 48%. There is no significant difference between the two companies, and both are efficient in retaining money after sales to cover other operating expenses. The last profitability ratio, that is earnings per share. This indicates the amount of company's profit allocated to each outstanding share of common stock. Puma stands at 4.17, that is, it has increased by 68% in earnings per share and diluted earnings per share compared to its previous year. This is because of the improvement in the financial result, and the lower tax rate contributed to the increase in consolidated net income of Puma. Adidas stands at 5.03 euros, that is, it has increased by 49.25% as compared to its previous year. Now let us look at the efficiency ratio. These ratios tell us how efficiently a business is employing its resources invested in fixed assets and working capital. Here we compare assets turnover ratio. As you can see in the graph, there is no difference between the ratios of the both companies, and found that both are using their assets efficiently. Now let us look at the price ratio. This gives us an idea of whether a stock price is reasonable or not. Price to earning ratio. This tells us the price we pay for 1% of earning. As you can see in the graph, Adidas price per earning has decreased by 25% since the past year, but it is still overpriced in comparison to Puma stocks. Now let us look at financial leverage ratios. These measure the overall debt load of a company and compare it with the asset or equity. For both the years, Puma and Adidas have consistent leverage ratios. In this section, we will be discussing the creditor's decision and the investor's decision. First, let us look at the creditor's decision. After analyzing the earnings, revenue, liability, and financial health ratio, we have got an overall financial stand-up of both of the companies. From the balance sheet, we notice that assets are increasing for both the firms and there are no significant differences. But when we analyze the current liability, Adidas has higher liability to pay off. From a creditor's perspective, by analyzing the past year's financial metrics, it is evident that Puma has been a stable player as compared to Adidas. Therefore, it is more likely to receive the returns from the company, and it seems to be less risky from creditors' perspective. Now let us look at investors' decision. By analyzing the profitability ratios such as earnings per share, gross margin, and return on equity of both the companies, we came to conclusion that Adidas is more attractive to potential investors who are looking to increase their capital gain in the short and long term. We also noticed that the stocks of Adidas have been consequently overweight for past 3 months, recommending us to invest in them, whereas Puma stocks were on hold for 2 consecutive months before turning overweight for the current month. The price per earning ratio of Adidas is also 93% greater than Puma. Adidas has been showing significant growth since the last year. In a nutshell, we see that Adidas have a strong position in the footwear market. It is almost impossible to differentiate between a Puma and an Adidas product. But Adidas have been vigorously invested in marketing their products, which have increased their net sales and in turn have made Adidas stronger in the global footwear market.
Thank you for watching our presentation.